Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Oh, you know what? I always think that, like, when I click that button, I'm like, already, I always forget something. We need the music. Come on, where's my music? Oh, I can't hear it, but it's going. Hold on. There we go. Okay. So, Tuesday, yesterday was a good day. Man, I got out of that trade shortly after ending, just, you know, because I didn't want to watch it babysit it all day, but that ended up being a 100 basis point move. Wow. But they did not, like, break through. See, here's the treasuries. Yeah, pretty solid downside, but they didn't completely break through. They came back up. So those lows from last week offering some support in this instance. And we've got a couple of data points here coming out in just a few moments. We're gonna have, hold on, where are we? Oh no, I thought we had stuff. Where is it? Oh, okay, we get jolts later today, but we don't have 6:30 news. I'm sorry, I was wrong. Okay, so let's come back over here. S&P 500 getting hurt as the rates were rising, but it was mostly flat yesterday. I really think the treasuries could be suggesting that there's some pain in store for the equity markets, but, you know, we're in a situation where the market's not going to want to move a whole lot until tomorrow, except for when there's news. So we may have to wait it out for that one, right? Some other moves here. Oil. Oops. Whoa, what happened? What happened? Oh no. Oh, I've had this happen to me before, and this is so annoying. Okay, I fixed it. Okay. Oil. Here's oil, still flat. Natural gas, after having a spike a little bit last week, it's coming back down. Gold and silver got hammered. I mean, listen, gold and silver were doing really, really good before that PMI number yesterday, right? But they got smacked down hard. And copper, after having risen pretty good yesterday, giving up most of those gains. Coming back over here, Bitcoin still struggling. At the moment, testing the bottom end of that range, 2,800, and the dollar got growing a little bit stronger over the past few days. So that's where we're at. So we're still at a pretty interesting intersection of the markets, but again, we have a Federal Reserve meeting tomorrow, so you know, there's going to be a lot of people holding off on taking risk and things like that. So that's basically where we're at this morning. Let's come in and check out a few things. If by the way, guys, I am super open on Discord. Like, you can always message me. You don't have to add me as a friend or anything, but if you do message me and send the message request, because Discord hides them for some reason. Like, I don't see them as easily as I used to, right? It really helps if you just come right out with your question. Don't try and small talk nobody like, hey, how's it going? And then I respond, and then you go, oh, he's here, and then I'll answer my question. Just ask the question. Makes things so much, you get a response so much faster if I know what you're on about, right? So I'm not seeing too much in chat though. Just people complaining about how tight the S&P 500 has been. I've definitely, I tell you what, the market will go in cycles, and it's definitely the case right now that the Discord is a little quieter than usual because trading for equity traders just hasn't been very good. The index traders it's been kind of a shit show lately. Futures dip after shock RBA rate hike as Fed meeting begins. Whoa, Hindenburg. Whoa. Okay, hold the boat. Let me blow my nose before I get into this. I am what? Okay, so here's the headline that's stunning me here. Hindenburg unveils short position in Icon Enterprises, says company is inflated by 75%. Man. First it was Gautam Adani, then Jack Dorsey, now it's Uncle Carl Icahn. Shares of Icon Enterprises are falling in the pre-market session as research firm Hindenburg Research is taking aim at the legendary corporate raiders holding company in a report that accuses Icahn of throwing stones from his own glass house. The firm says shares of IEP are inflated by more than 75%, and while referring to Icahn as a legend, says he has made a classic mistake of taking on too much leverage in the face of sustained losses, a combination that rarely ends well. Yes, they're totally right. When you're losing and you start taking on more leverage, that is always ends poorly. Usually ends poorly. Our research has found that IEP units are inflated by 75% due to three key reasons. IEP trades at a 21% premium to its last reported net asset value, vastly higher than all comparables. We've uncovered clear evidence of inflated valuation marks for IEP's less liquid and private assets. And 3, the company has suffered additional performance losses year to date following its last disclosure. The research firm also called out the alleged unsustainability of IEP's dividend, stating the company's outlier dividend is made possible for now because Carl Icahn owns roughly 85% of IEP and has been largely taking dividends in units instead of cash, reducing the overall cash outlay required to meet the dividend payment for the remaining unit holders. That sounds kind of sketch. Basically, he's not taking his dividends directly now in order to pay everybody else more. I mean, thanks, Carl, but if that's true, that's a little shady. Hindenburg takes exception with IEP needing to raise cash to pay its dividend, calling it a Ponzi-like economic structure. Hindenburg asserts that the dividend is entirely unsupported by IEP's cash flow and investment performance, which has been negative for years. IEP's investment portfolio has lost 53% since 2014. The company's free cash flow figures show IEP has cumulatively burned $4.9 billion over the same period. There's no way it's that bad. The firm also called out Jefferies for its positive coverage of IEP. Supporting this structure is Jefferies, the only large investment bank with research coverage on IEP. It has continuously placed a buy rating on IEP units. In one of the worst cases of sell-side research malpractice we've seen, Jefferies Research assumes in all cases, even in its bear case, that IEP's dividend will be safe into perpetuity, despite providing no support for that assumption. And the report concludes that Icahn will eventually have to cut its dividend, giving limited financial flexibility and worsening liquidity We expect Icon Enterprises will eventually cut or eliminate its dividend entirely, barring a miracle turnaround in investment performance. We'll update this piece as more information becomes available or Icon Enterprises responds. I am so shocked. Dude, if Hindenburg Research takes out Carl Icahn, they will be a legendary household name. Like, Icahn is one of the biggest, the I don't know, the greats. Like, Icahn is a household name, and if he went kaput, that would just be such a huge shock to the markets. I think that is, it wouldn't be the first time that I've seen where, like, a Hindenburg releases a short, it pushes the market down, and then they respond to it and they're okay. I think that has happened once or twice, but they do pretty good research, you know. And the thing is that they only have so much information that they can see from the outside. And I think that they painted a pretty good picture, but Icahn might be able to you know, point out other information that, you know, so I don't know if I would be taking a short off of it per se, but what I'm saying is there's probably going to be more drama to this story, and it's going to get really, really interesting very quickly. That is such a huge story in my mind. Australian Sharks was surprised 25 basis point hike after April pause. Aussie and yields soar. Is the Nasdaq immune? Nasdaq does not care? Question mark. Nah, they'll come down eventually, but there's technical reasons for the chasing the performance right now. They became underweight tech. Okay, let's read another one. IBM to stop hiring for roles that can be replaced by AI. Nearly 8,000 workers to be replaced by automation. Well, I'm interested to see what they think those roles are. 1 month ago, too much dismay and widespread denial, Goldman predicted that AI could lead to some 300 million layoffs among highly paid non-menial workers in the US and Europe. As Goldman chief economist Jan Hatzius put it, using data on occupational tasks in both the US and Europe, we find that roughly 2/3 of current jobs are exposed to some degree of AI automation, and that generative AI could substitute up to 1/4 of current work. Extrapolating our estimates globally suggests that generative AI could expose the equivalent of 300 million full-time jobs to automation, as up to 2/3 of occupations could be partially automated by AI. Okay, so I highly dispute this one. Okay. I do not believe their numbers, because what they're doing is they're looking at each individual occupation and then going from a general kind of a perspective of like how many are going to replace them. I think that you're going to be surprised to see what the AI can and cannot do in business. Right now, because the AI has been out for a long time, right? I don't see that many businesses integrating it that heavily into their work. I see individual developers doing this, and it just helps them get their work done faster, and they go on to other more interesting things. And so it's not actually like destroying jobs yet. Okay, but I just think their approach to how they're getting that number is an approach that is not likely to be very accurate. At that 300 million. Okay, that's like a really, really big estimate. Okay. And of course, Zero Hedge is going to play up as much as they can, right? Because Zero Hedge is all about trying to scare you as much as possible so that you'll keep reading their website, okay? Last week, Dropbox said it would lay off 16% of the company's some 500 employees as the company sought to build out its AI division. In a memo to employees, Dropbox CEO Drew Houston said that in an ideal world, we'd simply shift people from one team to another, and we've done that wherever possible. However, the next stage of growth requires a different mix of skill sets, particularly in AI and early stage product development. We've been bringing in great talent in these areas over the last couple of years, and we'll need more. Okay, so where does Dropbox play into what you have to do with AI? This sounds to me like a CEO that has no fucking clue what he's doing. The changes we're announcing today, while painful, are necessary for our future. I'm determined to ensure that Dropbox is at the forefront of the AI era, just as we were at the forefront of the shift to mobile and the cloud. We'll need all hands on deck as machine intelligence gives us the tools to reimagine our existing business and invent new ones. Maybe if they're going to be providing AI services, that might make sense. But while Dropbox's layoffs were lateral and meant to open up space for more AI-linked hires, in the case of IBM, its AI itself is making workers redundant. As Bloomberg reports, IBM CEO Arvind Krishna said the company expects to pause hiring for roles it thinks it could be replaced by artificial intelligence in the coming years. As a result, hiring in back office functions such as human resources will be suspended or slowed. Okay. Here, human resources is where I'm like, the robot's gonna replace that? Okay. Isn't that whole thing about dealing with people? Okay. I could easily see 30% of that getting replaced by AI and automation over a 5-year period. Maybe. Okay. Maybe. Part of any reduction would include not replacing roles vacated by attrition, an IBM spokesperson said. Krishna's plan marks one of the largest workforce strategies announced in response to the rapidly advancing technology. It certainly won't be the last, as virtually all companies follow in IBM's footsteps and lay off tens, if not hundreds of millions of workers in the coming years. Aditya, good morning. Just reading this story. So far, the treasury market has been the downside, but only slightly, and it's looking like another one of those kind of like the early on action is kind of slow. But we do have some news at 10 o'clock, so. Krishna's plan marks one of the largest workforce strategies announced in response to the rapidly advancing technology. It certainly won't be the last, as virtually all companies follow in IBM's footsteps and lay off tens, if not thousands of millions of workers in the coming years. Mundane tasks, such as providing employment verification letters or moving employees between departments, will be fully automated, Krishna said. And while some HR functions, such as evaluating workforce composition and productivity, probably won't be replaced over the next decade, it's only a matter of time before these roles... Oh my gosh. So you're going to use the AI to determine who gets fired and not. Yeah, that's going to go over well. IBM currently employs about 260,000 workers and continues to hire for software development and customer-facing roles, which is what you should do, right? Like what is eventually going to happen is there's some of these jobs where what you're doing is pretty mundane and boring, and you're just not going to have those jobs, and you're going to be able to use that money to hire more software developers and or people that have to do, face-to-face stuff. Yes. Finding talent is easier today than a year ago, Krishna said. The company announced job cuts earlier this year, which may amount to 5,000 workers once completed. So Krishna said IBM has added to its workforce overall, bringing on about 7,000 people in the first quarter. Coupling the company's imminent transition to an AI SaaS corporation will be the coming recession. Until late 2022, Krishna said he believed the U.S. could avoid a recession. He now sees the potential for a shallow and short recession toward the end of this year, although it remains unclear just how one can determine that a recession will be shallow and short. So one of the things that I see coming through on this, though, is that you have people that are blindly using these models to make decisions, and therefore don't understand the true impacts and repercussions that you get from that. And then so for instance, the HR departments are using the AI to filter through everybody's resumes. And the result is that they're ending up being too picky about the qualifications. Like, if you don't have like all of the exact technologies in there that are listed on the job role, then the resume gets filtered out. And so you're actually filtering out like some of your best candidates, because most of these technologies are not that difficult to pick up. And probably the reality is that within a year, that engineer will be picking up a new technology and starting a new system of some sort. You know, that's based on completely different stuff. Do you have any trading program where you teach students? So if you go to the YouTube page, I have a Start Here playlist that kind of has the key things for beginners. And then I also have an order flow playlist. I'd highly recommend going through the order flow playlist. And that gives you most of the key information you're going to get on this channel that is unique. There's also a free PDF. If you go to speculatorseth.com/strategy.html, you can sign up for a mailing list that will email you a strategy PDF that walks you through the key components that you need to start your own strategy. So that's what I got. I don't have any kind of paid program or anything like that. If I was going to do something of that nature, it would be like a class or something, you know? And I really don't want to do anything like that right now. So I don't foresee, or maybe a book. I would like to do a book. I got a lot of information to spit out, but I don't have, you know, I'm not one of these guys. You know, one of the things they teach you is like, if you're selling something, come out and have like a high, like a really expensive option. It's like, so I have my indicators and they're, you know, $100 for the indicators for life. And they're saying, go in and add a $10,000 option that like includes personal mentoring with Seth or some nonsense like that. And then you get more people that go to the second tier option because they think, oh, this is actually really good value. And then every once in a while you get somebody that pays $10,000. And I'm just like, that would be such a crock. Like, nobody should be spending that much on it. There certainly are people out there that do that, but anybody that's dumb enough to pay that much, I don't want to go and directly mentor that person. No, you're too dumb to be trading. Yeah, so that's kind of my attitude on that sort of a thing. Allergies are in full swing, man. I mean, it's still slightly tilted to the downside in the treasuries, but it's pretty slow, pretty low volume, not much change in cumulative delta. Did see oil take a little bit of a dive there, though. Oh my gosh. So the big story yesterday for us here in Utah was that Utah started, well, not that they started, but some websites started blocking Utah because Utah has this law about if your social media or spicy material, that you have to enact reasonable efforts to verify the age of users. And the hub said no thanks and just blocked all of Utah. So everybody's talking about that. And if you go to Reddit and you read this page, I just think this is so funny. Is because, like, here's the thing. Who's going to come out and be like, oh man, the hub was such a great website and I'm really bummed that I cannot view that website And I really think that we need to talk to our state legislators to rescind this law so that I can watch the hobby. No, nobody's going to say that. Nobody's going to admit that, right? So what you get instead when you go on Reddit in particular is you have a bunch of people all saying, oh man, those people, those people in Utah, they're sure going to have a hard time with it. But nobody that's actually directly affected coming in and saying like, well, yeah, this is a problem for me. Nobody's saying that, right? It's just a bunch of people being concerned for other people. I tell you what, man, that's not how it works. Most of the imagine using I don't want to use the word because I don't know what YouTube kind of does with if it sees that that's what you're talking about and throttles the stream or whatever, but imagine using spicy material as leverage and thinking you're the good guys. But dude, like this, so I came over to look for more if there was any other stuff to read, just because it looks like it's gonna be a slow first hour for us, right? This comment thread, so the top one, r/politics, 52,000 upvotes, 3.9 thousand comments. Like, that's crazy. What's the top comment? Okay, that's what you really want. We are not jumping through hoops just to satisfy your dumb laws. Yeah, but like, here's the thing. It's coming for you too. I guarantee you. Listen, folks. Having everything, sorry, I'm too loud there. Having everything on the internet be anonymous probably wasn't a good idea. There should be areas of the internet that should be anonymous for sure, but there are sections of the internet that should not be anonymous. Like your local, the comment section on your local news station probably shouldn't. You'd get better discourse if it's not anonymous. Seems to me. And yes, it also seems to me that social media is causing considerable harm among children and should be what is the word? It should be regulated, let's say. Let's not say regulated, but here's the thing. One of my problems that I've run into is like, I do want to control what my children are, what kind of content my children are consuming. And I find that the tools that we have to do that aren't very good. Like, I can download these apps and pay these services and they give me this stuff, but like the way this technology works isn't actually very good. So for instance, if I want to see what my kids are viewing, the way that this is typically done is you have to create like a virtual network on the phone, and then all of the data has to go to that virtual network, and then the virtual network sends it out to the regular phone connectivity, and that allows the virtual network to see all of the web pages that you're viewing, right? And all the kid has to do to bypass that is to just go into the app settings and disable the virtual network. And you might get a notification that there's been tampering, but like, what are you gonna do? What are you gonna do? Ban the child every day from using the phone? It's like, if and there's ways of them doing it where you can't even tell that they did anything. So like, it does not stop them. Does not stop them. And yeah, you giving those illicit materials to children, it's like objectively harmful to them, right? So I think it's totally reasonable to force some sort of an age verification beyond just, oh, I'm over 18, right? Anyways, what was I getting at? I was getting at it's so funny the way that people are talking about it, right? So all of these people are saying, oh, okay, like Reddit seems to think that Utah is going to see that the hub is blocked, and then they're going to demand that it gets changed. That's not what's going to happen. That's not what's going to happen at all. Anybody that's like viewing that website is going to be like, oh, okay, well, I probably shouldn't be viewing that anymore. Probably shouldn't be viewing that anyways. And they just go somewhere else. So like the hub is just losing out on business. I don't think that it's going to change anything in Utah. Yeah, here you go. Lawmakers in northern Utah will see this as a victory because it is a health crisis. But I don't think they realize the same thing will happen with every other major site when the social media bill that passed last month kicks in. And now that's the one that's interesting, is if all of a sudden you can't access Twitter, Facebook, Reddit, maybe even YouTube, because YouTube has commenting, right? If all of those were blocked in Utah, then there would be like, people would be upset probably. But I think that a lot of these larger companies probably have to be working on that age verification, because I think it's coming. I think that Utah's ahead of the curve, and I think that you're going to see more laws about this come about that is going to be a big enough deal that companies are going to have to start dealing with it. Probably. Because the point that I was trying to make is that there's the society has determined that the anonymous internet is not working out so well for them, and that the full unrestricted social media is not working out for them, and so it's gonna get changed. They need firewalls for phones. Well, I guess the issue that I have is, why are these, well, this is such a messy issue, right? The ideal thing would be that all of these controls are built into the phone, and that that Android and Apple create better parental controls for the phone. The issue is that any kind of tool that you create like that could then turn around and be abused by governments that want to spy on you or things like that, right? But I find the solutions for this on the phones to be insufficient. Which is why my new policy with the young ones is you just don't get your own phone device until you're 16. Because these older ones, I can't trust them with it. And I feel limited in what I can do about it. Okay, there's another little downtick there. Maybe we are starting to get some real downside now. That is exactly what I do. I give them a flip phone that doesn't have text messaging, or that only allows them to text me. Absolutely. So I'm seeing some iceberging at 20, half 20 on both sides. Let's go back to the razor. You know, if I can go on another rant, you know, I think that in part, this is government fault. I know that seems like so. Oh, okay, here Seth goes into his ultra conservative. The government's the fault of everything. But hear me out here, okay? The internet went a certain direction because the government wanted it to go in a certain way, right? The government loves mass media. The government loves mass media, okay? The government loves the nightly news because they can go and they can tell the nightly news what they want the American public to hear, and then they just repeat it. And the way that things work out is, you know, you have to do that if you want to stay in business or do well. So you do it. And the same thing happened with social media, man. So it's like when the internet started, y'all kids don't understand, because all the kids think about is you could go viral on TikTok and become famous. Look at this girl and this girl. I forget that. I can't even remember the names of these people. They became, you know, famous and millionaires because they posted a video of their face. What was it? What was that girl that became like a pop star, and like the video that made her famous was just her lip syncing to a song and with the filter that like follows your face, right? That's all the kids see, right? That is not what was cool about the internet when I was a kid. The thing that was cool about the internet when I was a kid was that you could go out there and find a community of, you know, 100, 200 people interested in this super, super niche subject that you're interested in. That's what was cool about the internet. Bella Porch. That's right. I hate the fact that I know that. That's what was cool about the internet to me. The thing that is the most powerful thing about the internet is its ability to connect people over great distances about super niche things. And everybody focused on the viral mass connect to everybody aspect of it, right? Like if I have a YouTube stream, yeah, I would like the stream to do better to some extent. Or at least maybe not the stream, but the YouTube channel to continue to grow, because that could provide us more revenue that we could then invest into making the channel even better and giving you guys even better tools to trade and be better traders with. And so that's how I would like the YouTube channel to do better, right? But I don't want it to reach everybody. I think that if I'm to the point where like I'm a household name, there's a problem for me, you know? Because what makes this community powerful is the fact that it's just a few dozen guys that come in here and do this every day and know this very, very well, right? So if you want to come in and you want to learn this, you can come in, sit in this community, interact with people, and you get a big leg up on, you know, getting yourself into a good position to trade. Or if you don't want to trade, but you just want to know what's going on, you can stop in every once in a while and see what's going on, and you know a lot more about what's going on in the economy, right? That's where this is a powerful stream. It's not because of the mass reach of it, right? Oh yes, we definitely have those. I tell you what, F2, this stream, it literally is like the same 1 or 2 dozen guys every day. And it's been like this for now like 5 years, over 5 years now. So yes. So as we got into this the other day, I'm pretty you know, YouTube keeps doing these weird things with streams. Like there was a period in like late 2019, early 2020 where YouTube was like, oh, streaming is it, and so we want to push people towards streaming. And then we would get like 50 viewers a day. And then YouTube changed to that. They were like, oh, actually pushing people towards streams like decreased engagement on the website, so they stopped doing it. So now YouTube pushes less people to the stream. And I don't think that YouTube really shows the stream to that many people. But the number of viewers is the same. And the people that I come in and I see actually chatting is the same. And it's people that I've known for years now. So why continue on YouTube? Why not switch to a private stream? I mean, I guess I could do that. I don't know what the advantage of that would be though. I think I would, number one, I think I would have to pay Zoom to do that. So I think that would probably ruin that option right away, right? and I have no need to like charge people. I mean, if the stream was getting to the point where it was over 200, so this is that Dunbar's number. It always comes back to Dunbar's number, right? That's basically like the number of relationships that an individual person can maintain. So once you get over 200 in humans, then it becomes unmanageable. So if the community started to get over 200, regulars, then I would start charging it to keep the community small. But otherwise, now there's been this other thing, which is like, why not go to Twitch or these other sites? But like, I think I made the right decision with focusing mostly on the YouTube, because while there were some periods in 2020, if I was on Twitch where maybe things would have gone a different way, in general, Twitch has not been a good place to invest. And a lot of the creators that built their name on Twitch are at risk of some point in the future of Twitch going kaput. So, and there's a competing website out there right now, but I'm not too impressed with it. Basically got created by some creators that left Twitch because they wanted to do gambling streams, basically, and the gambling company paid for it. But yeah, you got me distracted now. ADHD. Where was I going? Oh yeah. So anyways, my point was, it's like the small communities that are really valuable, right? I think Discord does that really well. I think you can have a small community on Discord, and there's like some really cool things about that. I should probably work harder to improve the Discord. I guess I haven't been keeping up on all of the cool things. Like, you can play like games through Discord together and stuff now, but we've just never really used a lot of that comes through the voice chat, and I don't use it's too much going on to use the voice chat during the trading. We could do it like later in the day and have like setup sessions or something like that. But Discord is one service that does pretty good at, you can create a small server and just have a small community, right? I wish that websites like Facebook had focused more on small communities. I wish that sites like Twitter focus more on having a really rich experience with your small community rather than focusing everything on the virality. Because the virality is seems to be a harmful to society. Like, that's where all the problems are coming from. Is like what goes viral tends to not be the content that's good for us. Discord's changed so much this year. Yeah, part of it is maybe I need to get Nitro too, but I don't know. I have to think about that. I should probably look, because some of these places I've looked at a couple of other, I didn't really look into it, but there were some other channels that were like, oh man, it seems like this channel is doing really well, and I can't explain why, because their content isn't very good. And it seems to me that part of how they got successful was actually their Discord. Is that they got people really engaged on the Discord, and then people turn around. Because, like if you go on Reddit, there was a thread last Friday, I think it was on Friday, that was like, okay, who actually like trades live on YouTube or Twitch, because I go in and I see it, and they don't, they only have like videos after the fact, and I want to see them do it live, right? Nobody mentions me. Maybe it's because a lot of days I don't take a trade. But I was like one of the first people to start doing it, and I don't get mentioned. It's funny. And yes, maybe part of that is because we trade treasuries and most people are interested in equity indexes, but I still don't think that explains it. I think it's that my audience is not on Reddit, and my audience is not commenting those sorts of things, and that they're a lot of you guys that would be on Reddit and reading that feel no desire to post about me. So if we want to grow from word of mouth, we probably should address that sort of thing. But really, I still always come back to, well, the best thing I can do for growing the YouTube channel is just continuing to make good content. I know that my content can often just be like information dump, but that's what I'm doing, and I've been doing well with it, and I should continue doing that. We're in a little bit of a drought. I know we're in a little bit of a content drought. I've been spending a lot of time on weekend projects, and so I haven't had the time to really focus on videos. I'm hoping though that in May we get all those things done. Educational videos are probably the best, yeah. And I really do have some educational content that is head and shoulders above other stuff that you're gonna see on YouTube about trading, right? Because most of the stuff that you see on YouTube about trading is not really telling you anything that you wouldn't figure out on your own, you know? They don't actually go into the real technical information that's actually going to provide you an edge. I'm watching this. I can see that on the 30 year, that the 30 year has kind of still been stuck in this range, but the 10 year seems to be more steadily going down. Overall, it looks like there's a little bit of a flattener going into today, which is different from what we had yesterday, right? Yesterday it was a bear steepener. The 30 years sold much harder than everything else. It's kind of curious. So yesterday, oh no, it was 524. I got it at 524. So the highest that they got yesterday, I think, was 36. I was quite surprised when I came back at the end of the day and looked at where it was. I was like, oh man. What's your thoughts on volume profile and footprint trading? Okay, so that's like the next video that I'm working on, and I will try and give you a little bit of a preview here. Okay, I'm actually wondering. Oh, that's right. I went in and I took it. So I like wrote my own version of it, and then I put it into ChatGPT. And ChatGPT said for the intro, this is what it suggested for the intro. Attention traders, are you using volume profile in your futures trading? If so, you need to watch this video. We're going there and addressing some of the serious problems with the underlying theories behind this popular analysis method. While volume profile was once a great theory, our understanding of markets has evolved in the past 30 years. But don't worry, volume profile is still an effective way of looking at the markets with just a few adjustments. In fact, with a correct understanding of the markets, volume profile can become a powerful tool. Keep watching to learn how to optimize your futures trading with volume profile analysis. The stuff that ChatGPT writes makes me nauseous. But like, that probably would work better than what I was going to do. Okay. So at the heart of market profile and volume profile is auction theory. Okay. This is a theory for how markets move relative to, quote, value. And John Dalton, in his book Mind Over Markets, describes this process in the following manner. The futures market auctions in a similar manner. If the open is considered below value, price auctions higher in search of sellers. If the open is considered too high by the market's participants, price auctions lower, searching for buyers. Once a buyer enters the market, price begins to auction upward until the last buyer has bought. Similarly, the market auctions downward until the last seller has sold, constantly searching for information. Okay, so the idea behind auction theory is value changes, price moves in a direction until all of the people that want to buy have bought, and then it will either find new value, or it will revert and go back down to where it was. Okay, This is the auction theory view of markets, and it's wrong. It was based on some really good observations, but that's not what's actually going on. So what is actually going, well, maybe I should just read to you guys what I was writing for my video. So under this theory, when market participants agree on fair value, the market will stay in that range, creating a distribution. If fair value changes, the market will auction up or down in range extension. If new fair value is found, the market will create a new distribution, or that extension can be rejected, forcing a test of the other side of the range. Most market profile practitioners will then use this framework together with past point of control, value areas, and related statistics to try and predict where the market may go during the trading day. Okay, so there's a lot to like about market profile. Markets do seem to switch from regimes where price appears stuck in a range to regimes where price pushes aggressively in one direction. Watching how the profile develops can tell you things about the current market conditions that can inform your trading. It's also a well-defined system of analyzing the market that attempts to make use of statistical information. This is beneficial, if only for creating consistent trading actions. Something that I've actually noticed is that the most prominent advocates of this system point this out a lot. It's not so much being able to predict what will happen as it is putting you in consistent situations, and then presumably the risk management takes care of the rest. But as I said, there are some serious issues with market profile. The biggest issue being that many of the assumptions behind auction theory are just wrong. So let's dive into the modern research to see where our understanding has changed. The new theory that replaces auction theory is what many of us refer to as the order flow driven view of markets, or theory of markets. Okay, it's a super boring name. I wish that we come up with a better name, but that's what the researchers and practitioners have come down to, as the order flow driven of markets. And its premise is simple: orders move markets. That's it. So under this theory of markets, a strong move up or down is simply the result of orders and does not necessarily represent some change in the perception of value among market participants. Okay, many of the largest players in the markets, like index funds, are largely price insensitive. They need to buy or sell a certain amount to rebalance their fund for the end of the month or the quarter. When they buy or sell, it will move the market despite there being no real change to fair value. I go into this idea more in my inelastic theory of markets videos. So if you haven't seen that video, go and watch that video, all right? So if price movements do not necessarily reflect changes in the perception of fair value among participants, then why does the market switch between trending and range-bound regimes? And this is where I feel that the ideas behind auction theory really fail. If a price represents fair value, why would the majority of the volume trade there? You don't trade when you think price is fair. You trade when you think it's too low or it's too high. And this is where the research gets really interesting, because it kind of suggests that it happens by accident. Okay, and to understand why this occurs, we can simplify the market a little by looking at Walrasian auctions. So this is a type of auction used in the Taiwan stock market, and participants in a Walrasian auction can only place limit orders. Orders are collected for 5 minutes, and at which point the auction occurs and orders are matched up. Okay, so you might have something like this, and orders are matched up where the buy and sell orders intersect. Any orders not matched up will be carried forward to the next auction. Okay, and so that area where the majority of the orders were matched up, there's going to be less liquidity there. Okay, this leads to a situation where it can be difficult for price to move away from that location. Clearing a price leaves less liquidity and makes price more sensitive to orders. So outside of that zone, there's a lot of liquidity to push through. So price just gets stuck in what I refer to as a liquidity hole. Okay, and these situations where price is moving aggressively in one direction, these are the result of large meta orders being executed. Somebody that has to buy or sell a ton of something, right? And that's what's creating the range extensions. This is not necessarily because of a change in value or whatever. So what really creates the market behavior that we see, that is kind of picked up on by auction theory, is large meta orders and liquidity holes in areas where it makes price difficult to move, right? And practitioners in managing large funds and so forth use these properties and manage how they execute their orders to take advantage of this stuff. So they split the orders out across time, and they try and minimize their impact on the order book as much as possible, right? Okay. So as you can see, these distribution zones don't come from some sort of agreement on value, but rather too much liquidity being cleared at once. This could be from a large transaction happening there, or from an impulsive sweeping move that damages the liquidity in that area. Okay, this damages the liquidity in that area and paradoxically causes prices to get stuck. Okay. Once you realize this, it seems kind of silly to ascribe so much significance to such levels, right? Once the liquidity in that area is healed, which rough rule of thumb takes about 45 minutes, the price holds no significance. Right? So I still got more to write on that. And I actually have a back test where I go through like, okay, if we open up below the value area and we try and trade it back to the point of control and whatnot, right? And the strategy is, it kind of does well for a while and it does poorly for a little while. And the equity curve that you get from the back test is actually a little scary, because you look at it and you'd be like, oh yeah, I would totally think that that's working, but then it would be a whole year and I would just basically be break even after tons of drama. Right. Okay. So that's the video, right? It's like market profile. They were picking up on something, but we actually understand it a lot better now. And some of the central premises of volume profile are wrong. But if you take this more recent information that we have, you can still use the volume profile and understand a lot about the markets, right? And you can understand it better than the people that are just using pure auction theory, right? But kind of underpinning all of that is that you have to be able to predict those large meta orders. So you have to understand the reasons why people will come in and buy or sell it. And it's not just changes in the fundamentals, right? It can be based on their positioning and rebalancing and on all sorts of other things, right? One of the things was yesterday we had a pretty aggressive push down after PMI. And so I thought that it was just the PMIs. And like after the PMIs, it just kept going and going and going. But apparently there was also a significant amount of corporate issuance on Monday. So Meta, for instance, offered $8.5 billion worth of bonds. So that means that Goldman Sachs or JP Morgan or whoever is helping them do the offering is going to come and sell treasuries to hedge themselves in that transaction, right? So that's going to lead to more selling. And that was, if they were doing 8.5 billion worth of bonds, that was a factor yesterday too, right? So those are the things that you want to focus on. And then once you know what those things are, and you can see a meta order playing out, you can predict really, really well how it's going to play out, right? They're going to push and push and push and push until you get to a spot where the resting liquidity, the latent liquidity in that area just gets completely gobbled up, usually from a large transaction or something like that. And then it kind of gets stuck. And when that happens, the person executing the meta order will throttle back their orders, which usually results in a little bit of a pullback. That's why you get these kind of like bear, what do they call it? Bull and bear trap sort of swings, you know, the zigzag sort of pattern where it just keeps going higher and higher and higher, right? That's why that happens. It's because the market practitioners have learned that that's the most effective way to execute to minimize their impact on the order book and get the best price. So, well, I'm glad that you guys liked what I read right there, because as I'm reading through it, I'm seeing a couple of things that I really want to add and so forth. That just sounds scripted. A few adjustments still. Yeah, I guess the thing that I don't like about the way that ChatGPT talks is that it overhypes everything and just makes it so cheesy, you know. But I guess I've been thinking a lot lately about this concept that your mind is a neural network, and so a lot about how neural networks that we're building, like these large language models, and how you deal with and train those, we can learn about a lot about how our own minds work from that, right? And one of the things that I've kind of learned is you come in, and as we're trading, that's the training part, right? There are some things that you can't necessarily learn. You have to train, right? Like, I can't explain to you, I can't just say, here's how you do weightlifting, here's how you do a snatch and a clean and jerk, and just show it to you, and then you go out there in the garage and just do it perfect the first time. It doesn't work that way. You have to train it, right? And it takes a long time, by the way, for people to learn this movement. It takes years and years and years to get really good at it. It has to be trained, right? So why is that? Because as you're doing the movement, then your brain, your neural network, is adjusting itself based on the feedback that it's getting. Okay, I did it this time, I was too far forward, so I need to adjust that next time. And so the cells in your brain are constantly rearranging themselves to adjust that movement, right? The thing that I've kind of learned is that what I will do is, like, say I'm coming in and I'm doing trading, right? I'll have developed a network from trading it. And so what I want to do is I want to turn around and I want to say, okay, here's my network. Yeah, you should be able to use my network and then be able to trade from it. And it doesn't work, because my network is geared towards me and all of the other facilities that I have. And you're going to have to build your own network, right? So I can't just info dump everything and then you get it. That's why I focused so much more on like these high level sorts of things. Just like with volume profiles, like, okay, so volume profile is an interesting way of trading. Here are the problems with it. And now you can adjust, right? Now you can use that information, what you've just learned about the market, to adjust your approach, right? So I'm giving you information to help you adjust your model instead of just trying to give you the model, right? And the whole thing is like, how do you present things in a way that both convinces and helps the person incorporate that information into their own neural networks? Because what I often find is somebody's completely oriented towards technical analysis, and then you give them all this information and they're not interested in it, right? And how do you convince them that, well, what you're doing is not really a very effective model, and you should use this instead? I found that trying to convince people of that is very difficult, and that's the challenge, is like, how do you present information in a way that best meshes with this process of training a neural network, essentially, right? You got the financial juice trial now. That's cool. Yeah, I really don't. My trading changed so much when I started using financial juice. It really did. I mean, before that, I was always using like Forex Factory and stuff to see what the numbers were going to be and stuff. But being able to just listen to the live squawk is such a big help. So I'm glad that you guys are making use of it. Speaking of which, I haven't heard from them in a bit, but let's see. We do have, at the top of the hour, U.S. factory orders, JOLTS, and core durable goods. Okay, so we do have some important data at the top of the hour. I think we've been doing pretty good. I was saying this first hour and a half is probably going to be pretty slow, But you know, you guys have asked some good questions. I think we've had some good discussions, and I've done some productive things. So it's good. I need to work on that. There are some things that you have to train. And trading is one of those things that you have to train. You have to come in here and watch it every day and, you know, study what's going on a day-to-day basis, because it's just too complicated for you to just read one book and then know everything that you got to do. Get from the market what they want? No. I'm gonna make you guys successful come hell or high water. And as many of you as I can. And my primary, would I say this is my primary goal? I don't know, but the thing that's at the forefront of my mind right now is, how do I best present information to be the most useful to people? And that means both people being able to understand how they can incorporate it into their own models of how the market works, and how to present that information in a way that it will be appealing, so that they stick around and watch the whole thing, and that they want to incorporate it into their trading. And that was my boy Travis. Wait, who are we talking about? Travis. That's... Was that the name of one of our robots? You remind me of the people who push really hard to spread the message of Jesus. That is 100% what we're... That's 100% what it's like, isn't it? Yeah, I think it was Travis. So with those robots, basically what ended up happening was we determined that the system that we had set up wasn't good enough to really so like we had some good concepts and everything, but there's a lot of like adjusting it to the market and so forth that really requires like being able to backtest, right? And the backtests that we were doing, because it involved order flow concepts, weren't very accurate. So I built things out to take advantage of the order flow, and I've been saving that data, and I need to create a machine learning pipeline for it, and I've just been focused on other things. So that may become the summer project. So if you want to know like what is the plan for the stream right now, we've pretty much got all of the gear, you know, to make the stream really nice. So it really does. We have a really nice camera. We have good lighting and all of that. We have a really great setup for the stream, right? So the next thing is to start building out more machine learning stuff that we can incorporate into our trading. So I am going to be creating some servers and, you know, multiple machines, because we need to be able to do like the really hard computational stuff without it affecting the latency and responsiveness of the GUI on this, on this machine. So we're going to need a 2-machine setup, and then we're going to get, you know, I'm going to have these pipelines that are constantly pushing the data in a form that the algorithms can understand and analyze. So we're kind of working towards that. Another part that plays into that is we have to replace this desk, because this is kind of flimsy and the kids can get into the courts too much. So I'll have a new desk here in a few weeks, and then after that, then I will maybe start buying the hardware to build the rack out. It really does, though. It kind of comes back to like Why are people interested in what they're interested in? We can't explain that. What is it about, like autistic people tend to have special interests, okay? But why did they develop that particular special interest? Why was it dinosaurs? We can't really explain that. I think that we might be able to engineer special interests to some extent, but some special interests just can't explain. You just can't explain it, And yeah, why is it that when you come in and you trade, why did you become interested in this certain type of trade and stuff? So I would think that it should be based on what we understand about the markets and what resources you have available to you, and therefore based on that information where you should be able to have the most edge. But that's not the way that people approach it, right? There's like something that speaks to them and they go and they trade that. Oh, that was weird. It's a little spike up there in the treasuries. It was actually quite strong in the 5-year also. That's really... Let me come back over here. Is we missing something? Sometimes a large volume of market sell happens, but the price, yeah. Because the bid absorbs it, right? This is why. So think of it again. It's like there's the orders, there's the future orders that you know are going to come, and then there's the current liquidity conditions. And based on that information, you can then determine where price is going to go, right? If all you have is price, right, and then you're going to come in and you're going to see like a bunch of lots trade, and price doesn't go anywhere, right? And there's a certain amount of randomness to it, right? That's why analyzing price on its own, you're not really able to pull a whole lot out of it, right? But once you have the order flows, and especially if you have ways of being able to differentiate the orders to be able to say these orders are all part of the same meta order or something like that, right? Now all of a sudden you can like start pulling out and being able to predict things, right? Because there's these flows are out there going on all the time, and there's no way from price that you can tell what they're doing, right? It's a developer's trait. Think of things logically with the data that you have, maybe. The way that people make decisions, I think is often perplexing to me. So like I was seeing a lot of things on TikTok where this guy was saying like, I went to a conservative college and these guys would always argue logic with me, but then there was this professor that said that if your logic doesn't match up with people's feelings, that it's ultimately not useful. And I was just like, well, okay, that's not the way that it actually works. So first of all, if the reason that you're doing something in politics is for empathy, 99% chance that you've been manipulated. 99% chance that you've been manipulated. Because usually when people think that they're being empathetic in politics, they're not actually being empathetic. Usually the most empathetic thing that you can do is let people work things out on their own. I know that that's hard. You get this savior complex, you come in and you can say like, look, these people are poor and we could do something and we could help things, we could make things better for them. You think that it's empathetic, but it's not, because when you help them, you are robbing them of the opportunity and the experience of having struggled and then overcome it on your own, right? And the outcomes that you get when you give people that kind of help aren't very good. So you think that you're being empathetic, but the real result is that it's actually harmful to them. So there's nothing empathetic about it at all. It's just an illusion of empathy that's created by the politician, you know? But it seems to me that there is a group of people out there that are very easily influenced by these kinds of arguments and these kinds of ideas, right? So, you know, like I'll take an issue that I care more about than maybe other issues, perhaps because I had some personal experience with it. But like the border, they say, well, they live in a poor country and we're helping them by allowing them to come to the United States, right? Yeah, you're allowing them to come to the United States so they can basically become slaves. And meanwhile, thousands of them are dying trying to come over here. All sorts of other crime that affects the countries that the people that are staying there are living in. Is it really empathetic? I don't think it is, because the policies that we have on the border right now are causing objective harm to many different groups of people, right? You just get like this surface level empathy, but then when you actually look at the impacts that this policy is having on everybody else, it's not empathetic at all. It's just a manipulation because one group of people strongly benefits when there's a really easy supply for labor, and that keeps labor costs down, right? So they have every reason to try and convince you that that you're a good person by wanting to bring as many people into the country as possible, when it's not the best thing for everybody. It's not the best thing for the people that are already here, and it's not the best thing for the people that are moving. And it's definitely not the best thing for the people that stay in the other country, right? But why is it that some people gravitate towards that argument so easily? We don't have an explanation for it. It's just something that materializes out of the quantum realm into your brain and then results in action, you know? Are they going to get back to 225 here? So the kind of market behavior that we've seen recently is like, you'll have the initial move and then it will bounce off the other way, and when you get to the other side, there's more aggressive. Which is to say that if we started reaching 25, you would start seeing like aggressive stop runs and stuff. And we've certainly seen that in situations where like that activity does happen, but then like it just fizzles out really quickly and comes back down and reverts. That's been happening a lot too. But I'm watching that 25 and thinking, yeah, things might heat up here. Oh man, they just slammed it down 2 ticks again. I think somebody is stirring the pot here ahead of the news that we've got coming. Oh, okay, so Luke had a question. Why don't you just ask it in chat, Luke? I'm in the process of learning Python. Is there any course or anything you'd advise me to start from? So there are all of these like, oh man, freecodecamp.com I think is the most common one. You can just search Python and it will give you a bunch of different free courses. There's like so many different ones, and the differences between them are pretty minute. Python is a pretty simple thing to learn, so I would just go and find one of those Codecamp things and start reading the tutorial. The only thing that I would say that's going to help you is that programming is something that you have to train, that you can't just learn, right? You have to train. So you want to be doing courses that have really good examples where you're programming it out on your own and, writing the code over on your end. and they present the problem, and then you try and write it out, and then they show you how it works, and you adjust what you did based on, you know, what you saw. There you go. Yep, freecodecamp.org. That's like the most accessible website that you can get this stuff from. Because if you just search for Python tutorial, you might end up with like a medium.com article that after you've read one article, it wants you to pay to continue reading. Right? Okay, so I am seeing some volatility here in the treasuries now. I don't know if there's too much volume behind it or what the cause is, but over here in the oil market, oil is getting savaged. They're down from what? When we started here, they were at 75.20, and now they're touching 73.60 at one point. No, that's basically where we're at right now, 73.60. So we've lost almost $1. Okay. Regional bank ETF KRE is having a tough day, down 2.2%. Downside led by MBC. What is MBC? Hummingbot is an open source software that helps you build high. Okay, let's look. I think I need to blow my nose. Hold on. Quick start video. Well, I don't like their documents at all. Yeah, what they're giving you here is super basic. The way this is set up makes me think that there's something about like they're trying to make money from this somehow, and I just don't see where they're actually getting it from yet. HBot. Oh, of course. HBot is a governance token that lets holders decide which exchanges and strategies should be included in the Hummingbot codebase, prioritize GitHub issues, and allocate developer bounties. And they have boot camps for $1,000. Yeah. I would rather start from scratch. But well, when you're first learning programming, what editor do you use? Well, so the way that things work right now, I would recommend using Visual Studio Code. So like it's like 75-80% of developers now are using Visual Studio Code. And then you can kind of modify Visual Studio Code to do what you want. I've actually found some command line editors that I felt were better, but that's probably like way beyond. So that's like a different thing to learn that I would learn afterwards. So when you're learning Python, when you're learning programming, you know, like the first thing is they're going to teach you like the basics of the language and like what's an if statement and what's a for statement and all of this stuff, right? And then the next level of it is data structures. So what you will find happens in programming is that the way that you store the data determines how your algorithm performs. And by understanding the data structures, that's like kind of like well, it serves two purposes. One is that it helps you learn algorithms and to practice with, but it also gives you an approach to, okay, here I have a problem. What's the correct way to, you know, like for instance, this whole thing with a volume profile. How do you make a volume profile? Well, if you know the kind of data structure that you need, which is a dictionary, because you're adding a price, you're adding volume to a price, and you have to know what, you know, each time that volume trades, you have to go and add it to the right bucket. So it's a dictionary. You know, once you know that, then the rest, it just kind of solves itself, right? You just build everything that has to work with the dictionary, and right. So that's the things that you would focus on first, right? And then you would go into some sort of a framework or application that's directly applicable to what you're trying to do. Like if you're trying to do front end web programming, then you would want to, you know, learn React or, you know, something like that. So for a trader, probably what you would want to start getting into then is there's a lot of stuff out there about like backtesting strategies using Python. So like a lot of that is like use daily price data to create a momentum strategy, right? I would focus more on those first. But what do you think about this move? It's, you know, we kind of detected the beginning of it, but after 24, they just rocketed through there. Well, then what's the point of learning the programming? I mean, the whole thing is that if the context is important, then you should be able to incorporate the context into the algorithm, right? I think you can do it. You might need to add a large language model as part of it, but you were long. And 21. Oh, there was a point of control there. I'm concerned that there is some sort of risk headline out there that we're not aware of, because the equities are buying up like crazy. Oil is getting just creamed and equities are turning down. And the KRE is having trouble. So them saying that the regional bank that's having the most trouble is BMC. No, I'm not finding anything. Let me just pull up the KRA for you here. There we go. Yeah, so they are moving to new lows, and it's down quite a bit over the last 2 days. No news whips for me. I don't know the way this usually goes. So hold on, I'm not sure if Financial Juice is if my tab is working. I'm gonna refresh and launch it because they should be going over the numbers right now, right? Well, I'll go over it. Factory orders, we're looking for a reading 1.3. Jolts, we're looking for a reading of 9.736. And core durable goods, we're looking for a reading of spot 3. So that Jolts maybe is probably the one that's going to be most widely looked at. I don't think you understand what I'm saying, Lucas. Price and delta diverging bigly, yeah. Well, I mean, there was some big impulse buying on there, but yeah, it's like a crazy volatile. It was a big move in the end. Seems like something's going on, but okay, here we go. Holy shnikes. Okay, so all we got was factory orders, so it's 0.9 versus 1.3%, and the treasuries jumped so hard on that. Okay, now Jolts at 9.59 versus an expected 9.736. So both of those numbers were worse than expected, and as such, the treasury's buying up here. Was that kind of aggressive buying before this, front running the news? Because now that we got that news, it sure feels like it, right? And they definitely, I mean, they jumped so hard on that. What's the beep? I have lots of beeps. I'm not quite sure which one you were talking about. You might have heard the beep when the news is released, or you might have heard the beep at the top of the hour is probably what you heard. It makes a beep sound at the top of the hour. My clock does. Okay, so Lucas was saying regarding prices, only variable of analysis and using future orders, we learned from Stokoff that we have to understand the current state of the order book, which means you need to account for liquidity too. No, so that's not what I was trying to say. So the way that I would approach the programming is look at like really common use cases that are like well understood. So the ones that are like the most well understood kind of simple strategies are going to be more of like these CTA strategies where you analyze 100 different futures and based on that decide which ones to go long and which ones to go short on, right? And these are generally profitable strategies that are higher time frame and utilize daily closing data, for instance, right? That's where I would probably start. So you understand those bits right? Because if you were to go to a quant firm, that's kind of where they start with stuff, right? So once you understand all of the nuances involved with that kind of a back test, right? Then you can go and you can dive deeper and you can start to construct a system that will allow you to backtest something that will be able to account for everything that we would really need to be able to use in order to have an effective intraday trading strategy, right? Like what the current liquidity conditions are and correlated instruments and, all the stuff that we talk about in those videos. Right. So I would start with like those high time frame strategies that are like common cases first, because if you try and dive into like directly into a market making algorithm, you might get lost, and you're just, I think there's a couple of other things that you would need to learn first to be able to make effective decisions. And I don't trust those what was it called again? That humming bot. I don't completely trust them. I think that you might get a better framework if you do it yourself. But you got to get yourself up to the point where basically what you want to do is you want to get yourself to the point where you could be writing something like humming bot, right? Okay, well now the equity market is really puking on that. So I think the best I could have taken was maybe 348. So one of the issues that I have, so this news is actually a little bit, I'm not 100% sure. Yeah, any thoughts as to why we're going down? Well, so the news that we just had released was US factory orders month over month and JOLTS. So again, factory orders, we were expecting 1.3, we got 0.9. So factory orders were 0.4% less than expected. Okay. After having been negative 0.7 the month before. Okay. US JOLTS job openings was 9.59 versus a previous reading of 9.736. Okay. So here's my issue. I do not consider the JOLTS number to be super reliable. I think that there's a lot of jobs in there that are just nonsense. And a decline in those, I'm not sure it actually tells us anything about the fundamental underlying job market or not. And factory orders month over month, was that really such a strong miss that it justifies how far the treasuries moved? I certainly don't think that it's more important than like yesterday's PMIs, but it looks like we're gonna wash out those prices, aren't we? Let's see here. Let me come over to ZN. Not quite. We're not quite there, but we're getting close. We're getting close. Once we get above, say, 07 half, 115.07 half, then we're starting to be above yesterday's highs. Technically, the high is even higher than that, but so that has me questioning whether I can really try and buy this and play the momentum, right? And I can also see, as I think it was Uzi pointed out earlier, that the price and the delta are diverging big. That does seem to be the case. That the treasuries, like the lowest from this was 52,000, and now cumulative delta is 58,000, which means that there's only been a net 6,000 change here. But the equity market is definitely reacting to this news much more strongly than it did some of the other news earlier in the week. So that's where we're at. My take from that is that I think that the future flows are likely to be a little bit more mixed than the price movement immediately after that news would suggest. Yeah, that's what I'm trying to say. So I'm kind of watching here and keeping an eye out for if these flows revert in the treasury. Okay, so I'm seeing some iceberging here. It's 0605 half now. It looks a little bit more significant than some of the other flow that we saw before the breakout. Man, if we had just traded the breakout well before the news, you'd be in a good spot. You could have held through the news, but I don't think that I would have held through the news. You know, like Uzi took it off before he got out, and like, look at that, man. Look at how far it's gone since then. It's pretty. You didn't get out? Oh, you degenerate. No, you said out at 28. You lied to me. Oh, I did get out. Yes, okay. So what I'm saying is, imagine if you had held it. That's what? 4, 8, 16. That's $500, man. It's a big move. Okay, why are your limit orders in ES different from mine as Rhythmic Demo? I am using tick aggregation. So you'll notice that each price is a full point instead of a quarter of a point. Shrugs. Yeah, so what I'm doing is I'm combining 4 prices into one. That's why it looks different. So when you're looking at yours, right, you're probably only seeing like 100 contracts or so on the bidder offer, right? This is not backing off. I got to get myself in a different mode because, you know, yesterday it was the drop, right? And now it's buying. And when the treasuries are buying, it's very different flow. I'm kind of curious, though, how you ended up at taking that original trade anyways, though, because the market was really kind of dodgy at the time, I felt. Babylon B just tweeted, "Land on your feet. 7 great career choices for laid off journalists." See, when I was looking at it like, oh, it's not backing off, that was 06. It's already 08 now. Like, look at how aggressively it's hitting there. And 3,000 iceberg, they just plowed through almost without a second thought at 08. I was basically, yeah, okay. That was a really lucky trade, man. This order flow in the treasuries is way too aggressive. This is way more aggressive than I would have possibly have imagined. They really care about jolts that much? Am I the only one that's kind of like, that's not right? Could you briefly explain what below/above bid-ask means and its implications? So I'm not sure what the context you're talking about is, so I'm gonna try and guess. I'm guessing that what you're talking about is categorizing orders based on. Oh, you're talking about in Jigsaw. Talking about in here, I think it is. I can't remember where I saw that. Oh, right here. You're talking about these ones? At ask bid, above ask, below bid. Okay, so what can happen? Yeah. Okay. So what can happen in like a less liquid market is like my current best bid, best offer is 07 half, and then I see an order go off at 08, right? So the problem is that the updates that you get don't necessarily always come in order. If you have market by order data, then you don't really get those sorts of things. But with your regular data, especially if you're like trading in NQ, you know, it could tick up and there could be stop orders, and you might see those stop orders execute at 08 before the best bid, best ask adjusts for the ask to be at 08, right? And so in Jigsaw, you can set it up to use those different colors. Now, situations where I'm like in the ZN, situations where I will see an order come in above the best ask, like hardly ever happens. Hardly ever happens. But it's just a small niche case that's caused by the way that our data works. Right. Okay, so I'm hearing that Western Alliance Bank was halted. I'm really thinking this must be regional banking stuff, right? Because every time that it's been regional banking, it's like we don't hear anything. We're not seeing anything on Twitter, and the market's just like freaking out for no reason, right? Let's look at the NYSE halts. Okay. WAL, Western Alliance Bank Corporation. I'm gonna come over to Twitter and see what we get. We search for that. MCB. Oh, I had that one wrong. Metropolitan Bank Holding Corporation. Oh, that is an ugly chart. Dude, look at this bank, man. Look at MCB. Oh, really, Lafta? You've been trading the 10-year for 2 weeks and you've been profitable? Well, you know what? It's been I've done really well the last 2 weeks, right? I think that it's been really favorable trading for us in the treasuries lately, right? I think the real, you know, if I was really going to be like a true professional, that at some point I would want to be switching which instrument I'm trading on based on the day or something like that. But I'm getting adhere wall, new pane, JP Morgan, new pane. They're all going down JP Morgan, just not as aggressively. Nothing about it on zero hedge. Lawmakers led by Democrats urged the Fed to halt rate hikes ahead of Wednesday's announcements. Well, there's definitely some tweeting about Wall on Twitter, but not a whole lot of activity, like not a lot of information. Pac West Bancorp pause due to volatility. Western Alliance Bancorp halted due to volatility. Double digits. Kind of think this regional bank thing is not quite over yet. Yeah, because you didn't fix the problem, so everybody's just pulling their money out. No, Zero Hedge still has me blocked on Twitter. I can view their website. I just can't see their tweets. Let's check. Because I bet you that they're tweeting about it. Western Alliance Bancorp sinks 21%. Lawmakers urge bankers to stop unnecessarily adding sesame to food. What? What the? First annual contraction since December 2020. In the new orders. Not too much. They're kind of picking up on it at about the same time that we are, essentially. Our trader is killing me. Stable software, but very well. The our trader pro is not. I wouldn't directly use it. You don't want to go back to Ninja? Well, then don't. Just use Jigsaw. Man. So where was it? This is just going nutso. This is getting to the point where I look a little silly just sitting here and not being involved, right? because they are above last week's highs. Holy shnikes. Oh, okay. So now the next spot is 15.5. Man. Did I get a piece of the cake? What are you talking about? There was cake? No, I did not get a piece of that cake. I don't know if it's actually the number NASDAQ Technologies. Yeah, the dollar. Well, the dollar took a. So now that's interesting because the dollar took a dive on the initial news and has just kind of been rebounding ever since. And it's a little bit all over the place. But I'm not sure that the reason it's moving is because of the news. I think that it started moving first because of the regional bank issue. I think it was the regional banks that started this. That's just my theory. I think the regional banks started this. You got like an exaggerated move because of the way that the flows were going. And that's why you're getting so much continuation flow as well. Okay, so I have MCB. This is a regional banking stock that was just halted. I have WAL, that is another one that has been halted. And then I have JP Morgan. So JP Morgan just as kind of like the, actually let's like switch it around. So let's do JP Morgan on top. And then I'll close these ones. Metropolitan Bank and Western Alliance. Actually, that way you can see how bad it is. Right? Now we can see all of the regional banks compared to JP Morgan. So you see what I'm saying? Like, I think that it's like, oh, there's another leg of this banking crisis. Or are the regulators going to be forced to step in and do something now? Because the issue that I have is like, okay, they're down a lot, but does that actually... Is that actually really justified? What's triggering it right now? No, don't want Walmart. Western Alliance Bank Corporation. News. Okay, when I do a search, barchart.com's headline is Western Alliance Bank Corporation, a regional bank, attracts value investors. Let's say till past hour. Okay, well, here's Forex Live's analysis here. Regional banks fears resurface with some down more than 15% today. Not so fast, Jamie. The part of the crisis is now over, said JP Morgan's Jamie Dimon to start the week in an analyst call after taking over First Republic in an FDIC auction. Dimon said there's a chance another smaller bank fails, but this pretty much resolves them all. The market is trying to make a liar out of him. Shares of Metropolitan Bank are down 21% today, with PacWest Bancorp down 17% and Western Alliance down 16%. Metropolitan and PacWest are both at the lowest levels since the panic bottom on March 13th. The KRE Regional Bank Index is down nearly 4% today and below the March 13 low as losses broaden. It's unclear what the catalyst for the latest leg down is. It could be short-term buyers taking profits or getting blown out while hoping for a rebound. There's also a lack of any segment of would-be buyers as uncertainty plagues the sector due to fears about commercial real estate and hold-to-maturity loans. We could simply be seeing multiples compress on regional banks. The fear is that this leads to another round of deposit flight and puts the FDIC in a bind. Like Diamond, many thought that FRC would be the end of the First Republic Bank would be the end of the regional banking crisis. After today's price action, no one should be so sure. In all, the market is sending a powerful message to the Fed today, and it's a strong pushback against a surprise hike from the RBA. It may mean that if the Fed isn't a bit more explicit about heading to the sidelines at tomorrow's FOMC meeting, then there could be more kicking and screaming. Right? So I'm going to go out on a limb here and say that there is no catalyst, that traders are just coming in and pummeling these to try and make something happen. This is a reflexivity trade at work. And we've mentioned the reflexivity trade in response to this stuff when it was First Republic Bank, right? So you come in and you short the stock like crazy, and then people go, "Oh my gosh, what's going on?" And then then depositors flee, and then that makes the stock move down more. There's a reflexivity at work there that somebody must be taking advantage of. So there might not actually be a catalyst. Market sweeps are trash right now. What, you seeing a lot of that? Bothering you? I don't understand why you're saying that. Like that. You really are a little bit too vague for me sometimes, man. I have a hard time understanding. No, too aggressive oh yeah. Dude. Sell in May and go away. Sure feels like that, huh? Well, yesterday, so yesterday I came out, I made a TikTok and a YouTube short saying that even though the equity market was really quiet yesterday, the treasury market was not, and kind of suggested that the stock market may be about to get blindsided, right? Now, there is no way, like when I was taking that trade yesterday, I was thinking, oh man, I go long the treasuries here and I could probably hold it for a while, possibly, because it does look like maybe inflation is picking back up again, right? So here's the thing. This is the interesting situation that we've been in, particularly with the treasuries, okay? Because sometimes I'm kind of hinting at things to you guys, and I don't want to explicitly say it, right? But I'm going to explicitly say it, right? Orders move markets. What's the biggest flow in the market? It's money printing from the Federal Reserve and the banks, right? So the stock market has been largely up since the initial collapse of Silicon Valley and all of that sort of stuff. Well, what happened was that the Federal Reserve and the banks came out and printed a ton of money and undid a lot of the monetary tightening that we'd done, and that's why you'd seen this flow up. And what I've seen now was going into the week, looking at the flows, there was a couple of key analysts that are looking at this thing that are saying like the impulse is switching and it's going to be tighter, and that they're going to be taking money back out of the system again. Okay, so that happens for one day. That happens for literally one day because of a hot PMI. And then the very next day, some of these regional banks are getting BTFO'd. That's what we're seeing. And so the reason that the treasuries would be buying as aggressively as they are is because traders are betting on the Federal Reserve printing even more money. I don't see how the Federal Reserve comes out and says, oh, we're not actually going to raise interest rates this month. Probably they'll still raise, but they may start printing the money. I don't see how you justify buying into the treasuries at these high, after such an insane trend, unless that's what you think is happening, right? But that's basically all we got. Hack West is the most hurt. Man, Zions Bank down 10%. See, nobody, yeah, we need comprehensive FDIC reform, or this is going to keep happening throughout the banking system. You sure watch that 4% in the 2 years, don't you? No, we're below, well, these ones were below 4. Yeah. So here's our chart. So these price levels are not predictive of anything, but they are good benchmarks to tell us how strong a move it is. On Monday, we had a pretty strong move down on the PMIs, okay? That move is getting washed out. Like, we are above that move now. There, they just slammed through it, in fact, as I was talking there. Man, they really pushed through. So now you have to go back to some of these highs at like 115.30 half. Maybe you have to go even further back to some of these prices like 116.30. Maybe where we're heading in the next week. Man, remember these moves right here? These were massive. I'm scared to trade it, because when we got this before and I tried playing it, I got destroyed. And I'm like 30 minutes too late, so I'm like way behind the curve. How much of a change in delta is this now since the bottom? 50, now 75. So 25,000 contracts is a lot. I mean, that's equal to what we had yesterday. By this point, at least. Things are escalating in Paris, and I don't know if that's gonna change anything. I'm not really seeing any news outlets really covering it other than people pointing out that they're down. So there was no bank news. There was no yeah. That's what we're saying is there's no catalyst. It's just the banks are down big today. And nobody knows why. That's why I'm saying that this looks like a reflexivity trade to me, right? Like, I think that they're coming in and shorting those banks and creating, knowing that it will have an outsized impact on the market, and thus you get all this other stuff. Man, for every step that this has gone, like, I could have totally have taken it. Like, this is just nuts. Maybe. I mean, I do wonder if the rates getting back to 3.6 yesterday caused problems for somebody, and we just don't have the info yet. You know, like all of the banking guys know what's going on, but we're not gonna find out, you know. This is too much volatility for me. I'm starting to feel very, very tempted to come in and step in and do something, but I need to take a step back and look at this and be like, no. There's no way you can try and chase this now, Seth. I don't know. I'm not sure I agree with that, NASDAQ Technologies, because it happened right after the negative orders and jolts. There was some buying and volatility happening before that. It definitely picked up after that news, but I was seeing some hints of that going around in the treasuries before that. Remember when we were like, oh wow, it came up and then back down 2 ticks at a time and all this stuff real crazy? And then the news happened and I was like, are they front running the news? But then it just kept going. And I think that the flows that I'm seeing here are way stronger than what that news suggests. No, it was all like, I'm looking at this. Yeah, I mean, the truth is that none of us really know for sure, right, NASDAQ? But I'm talking about, so if we come back here, okay. So here's the news, right? And I'm talking about like all of this right here. So about 15 minutes or so before the news came out, we started to see some frantic action in the treasuries pushing things up. But I said, like, the volume and everything doesn't make sense, right? Now, since then you start to look at the deltas. Now it's like a very clear long, right? And I'm just saying, I really don't think that this news can account for these flows that we're seeing. I don't think that jolts can account for that. Right? But so let's come back here for a second to this screen. Okay. These banks were going well before that, right? From basically the open, from 7:30 to 8. So I think they will have a good case that the buying in treasuries is anticipation of more money printing because the regional banking crisis is not over yet. Now, the split side of that is maybe these banks are fine and so they don't go kaput. I don't know. JP Morgan is definitely fine. Sorry. So just to help you understand what this chart is. JP Morgan is the main data series. These two, the blue and yellow line, are two of the regional banks that are down the most. So I'm displaying it like that so that you can see how dramatically they're being affected relative to, you know, the most stable bank that we have. That's what that's about. Okay, so one is sorry, Wall and so Metropolitan MBC which is Metropolitan, and WAL, which is Western Alliance Bancorp. But there's plenty of other ones that are also down double digits. Okay, so let's take a look. Zero Hedge does have a story about this now. Here you go. Okay, so they're wondering the same things that we are. Zero Hedge, weak jolts, poor factory orders, a sudden realization of the urgency and seriousness of the debt ceiling debacle, Europe back from vacation, or just pre-FOMC jitters? Who knows, to be frank, but everything just went a little bit turbo, starting with a total collapse in regional banks. By the way, KRE is the regional bank index, is maybe the one that you want to watch, okay? Back, so that things are not so confusing to people, I'm just going to make the top one KRE, and I'm going to delete these other ones. Okay. There you go. Okay. And despite the Biden administration claiming that First Republic Bank was just another, quote, outlier business model, PacWest, Western Alliance, and Zions, among others, are in free fall. The majors all instantly puked at the US cash open, led by small caps, but the Dow and S&P are down over 1%. The most shorted stocks are getting monkey hammered lower. Just as we warned yesterday, the surge in yields driven by a heavy corporate calendar and illiquid market has reversed entirely, with yields collapsing this morning. The 2-year yield has puked back to a 4% handle. Gold has spiked back above 2,000. And Bitcoin is starting to rip as well. And I did not notice that. Oh yeah, they overcame the downside from overnight in Bitcoin. And gold is mostly just recovering the losses from yesterday. Just basically what they just said. Okay, cool. Oil prices are tumbling, with WTI now well below pre-OPEC plus levels. Finally. Is this a last-minute effort to pressure Powell to be one and done? Question mark. I really do suspect that this is like a George Soros style reflexivity trade. It's like, because the way this is coming through is very out of nowhere, right? Short the Fed and buy everyone. So did you guys see this guy on Wall Street Bets? Oh my gosh, this one is good. Let's see if it's still up there towards the top. Oh, there's the thing about icon. Okay, here we go. Okay, the title of the thread is, I will be suing Robinhood for $295,000 if they do not allow me to exercise my First Republic Bank puts. 1 week ago, I reached out to Robinhood to inquire if I could cash out or exercise my puts if First Republic is suspended. Exhibit 1. If FRC stops trading and the company's shares are worthless, will my put position be exercised and converted into a short position, like what happened in the case of SBNY? Assuming my put position is nearing expiration. I was assured in writing that I would be able to exercise my money puts into a short position in the scenario that FRC is suspended. Exhibit 2. You'd be short a few thousand shares based on the number of contracts you currently hold. Okay, and in the event of a halt, like you mentioned in the earlier example, you'd be in a tough spot trying to cover shares on an exercise that you're currently short on. So they're basically telling you that you might not be able to get the money, right? In the event of a halt, like you mentioned in the early example, you'd be in a tough spot trying to cover shares on an exercise that you're currently short on. I bought and held puts which are now worth $295,000. So this guy, he asked the question, they told him, and he did not understand He did not understand that basically if First Republic Bank gets halted, you might not be able to exercise your puts and realize your 295,000 gain. Can you believe? I don't know how much money he, oh, actually we do know. He spent 945. So he spent $945 on puts, and he got 175,545 out of it. He took a lot of effort and time to write all that and didn't take the same effort to understand the answer, right? I reached out to support recently to confirm what they already told me, that I would be able to exercise my options by entering a short position. They responded by saying I may be able to exercise, but as of now, they do not allow short sales. I was just like, he's hearing what he wants to hear, and he did not actually read what they said. Okay, I've already consulted a lawyer based on these written guarantees. I am likely to win if this comes down to a lawsuit. No, you're not. Robinhood, which claims to represent retail traders, has yet again proven to have no regard for their customers. While I am fully willing to go the legal route, I urge my fellow Wall Street bettors to put pressure on Robinhood to do the right thing. My correct bet could potentially expire worthless as a result of Robinhood's lying, backstabbing practices. We did not allow Robinhood to get away with disabling the buy button, yet time and time again they've shown they have no problem mistreating their users and causing large financial losses. Dude, it's not Robinhood. There's nothing they can effing do if it's halted, dude. Let's hold Robinhood accountable. This is not just for me, but for thousands. What an idiot. Okay. Lol, your screenshots don't explicitly say you will be able to exercise, man. You screwed the pooch, right? Well, this is an expensive lesson you won't learn. Okay. About 1,000 people told you to exit your position in your other thread. One of the only times Wall Street Bets was right, and you still effed it up. Oh my gosh. And there was, like, I went and read the comments, and they were telling you, like, no, you're not going to be able to get it. Can you imagine having made 100,000, but then because it gets halted, you can't exercise? That's so crazy. Sorry, did you miss the answer? Here, exhibit 2. So I'd be able to exercise in this scenario, and they don't say yes or no. They say you'd be short a few thousand shares based on the number of contracts you currently hold, and in the event of a halt, like you mentioned in the earlier example, you'd be in a tough spot trying to cover shares on an exercise that you're currently short on. So they're saying you would be short with no way to realize the profit, is what the guy is telling him, exactly what the situation that he's in. Yeah, why do you think NDFs are some of the most illiquid contracts in the planet? Non-deliverable forwards is a two-party currency derivative contract to exchange cash flows between the NDF and prevailing spot rates. Yeah. This whole thing is just, like, it's so crazy to me. The thing that I think is funny about all of this is that if there's, like, something that can go wrong in a trade, you're going to see it happen to somebody on Wall Street Bets sooner or later. Yep, you can't exercise them, basically, so unhinged. Can you imagine having turned $1,000 into almost $200,000 and then not being able to realize the gain? Oh my gosh. This is why I'm never interested in those trades, though. I'm way more interested in you buy the call and then something good happens, and it's worth like You make $1 million out of it. That's a way better trade. Pretty much what I was trying to argue that day, why yield futures will be illiquid for a long time. I don't know. I feel like that a 2000 is okay. 1400 is too little. Oh yeah, I like having the same amount on Garlic Coin, but no one is on the other side for you to get out, dude. If yeah, but in order for me to exit Garlic Coin, it would have to be like in the headlines. Absolutely, you're absolutely right. Okay, like if Garlic Coin all of a sudden took off yesterday, and then CNBC was talking about it, and there's all these people that it was like with the Dogecoin thing, and there was that one guy that became a millionaire out of it, and then he's going around to all the things and doing all of the media interviews going, I'm not selling. That wouldn't be me. I would be sitting here going like, please Coinbase list it, please get listed on Coinbase. And then as soon as it gets listed on Coinbase, I would just slowly start selling a little bit every day, minimize my impact on the order book, and be quiet. And you guys would all be here on the stream and would be like, Seth, are you a millionaire now? Because I can see that Garlic Coin is worth $100 a coin. And I will be like, no, I actually, I screwed it up. I lost the keys or something like that. I'll lie and not tell you anything about what I'm doing and pretend that I don't have a huge ton of Garlic Coin that I'm trying to offload. And I'll get rid of it all. 100%. Dude, oh yeah. There was, so he's talking about Pepe because that was like a pump and dump that like went crazy in the past day or something like that. Just say that you control like 99% of okay, so like here's the crazy thing about this Akshay is that I mined a lot of it. And I was in like one of the top 100 holders at one point. But there has been a number of people actually now that have been like buying it up, essentially. So like there's this guy that's been posting on the Garlic Coin subreddit saying that his plan was to control 69,000 Garlic Coin, and he did it. It took him like 2 weeks, I think, but he did it. And if you come back, let's come and look at it. It's almost time for us to get going. Man, what a crazy move. What a crazy move. I think I need to go back for 3 months. So yeah, this little period right here is I think that's him buying it. I need to hedge my bags. Yeah. So but like think it's to like 1 cent, right? So he spent, sorry, if he has 69,000, that's like he spent like $600, $700 or something on buying it. Isn't that crazy? I can't even remember how much I have, to be honest with you. I can't even remember. I can't, like the blockchain explorer that I was looking at for it is gone. So I don't even know how to look it up and how much it's worth right now. I remember that when Garlic Coin was back here, where are we? No, that's not right. Come on, give me like, there we go. Okay. When we were having this spike and it was worth 30 cents at one point, I was freaking out. I was like, oh my gosh, it's worth so much and there's no way for me to get out. because there's no way that I could transfer it to the one exchange that's doing it and all of this stuff before something happened. Somebody else was prepared and got out and tanked it, and then after that it's been nothing, right? It's just been like a slow, steady decline since then. And then there's one guy buying like $600 worth of it. So if somebody came in and decided to buy $1 million worth of garlic coin, then that could trigger something crazy. But I don't know. At this point, I'm pretty skeptical that it will ever amount to anything. I think that it was like a pump and dump, and that the people that were pumping it are gone. And why would you come back and want to pump garlic coin when you can go and start your own coin and pump that instead, right? So I'm a little, yeah, I don't know if the garlic, I mean, you could still get something like this again after a halvening and a Bitcoin bull cycle and stuff, but I'm starting to get pretty, I'm giving up on it. I don't have too high of a hope for it. I don't watch it very often. I have no interest in mining more of it. I want to see what these guys said about the Carl Icahn thing. What I read is that I can get a 15.8% dividend yield courtesy of Carl Icahn. Yeah. I wonder how hard they got hit. I don't think I can look them up though. Just started theory. Garlic coin is backed by garlics, and with historic global warming, harming farmland, garlics are going to be hard to come by. Well, somehow I don't think that people will buy that one. I don't know. Let's see what people are Reddit on garlic coin. I'm probably not helping things by being like, I don't know if it's ever going to happen. I should be like, guys, you got to get into garlic coin now. It's going to like pump up super crazy next week. You don't want to miss this. This is where you're going to be like 1,000,000x your money. You got to get into garlic coin. Like these are these guys. They are buying up all of the supply of garlic coin. How, you know, yeah, there's not going to be any more garlic coins to buy. So it's just going to go up, man. That's what I need to be saying. Oh, they made their own exchange. You can now trade garlic with USDT on Garlics. Oh, and you can now buy it on Coinbase Wallet too. There was this one, the garlic coin improvement proposal and inactive garlic coin address and demurrage. That I don't think that one's ever going to go through. I can go and take this video out of context now. Listen, if you did that, you would be the one that was doing something immoral, not me. Right? You go and you take me out of context to try and induce somebody else to buy, then you're the one that's spreading rumors and manipulating prices, not me. There's really not that much activity on this subreddit these days. Maybe if I sort by new. There hasn't been a post on the subreddit in 4 days. Part of the problem is that some of the major exchanges that had it don't have it anymore. So that's what really truly killed it. That's why I keep saying, like, I always bring up Coinbase. It's like, well, if Garlic Coin all of a sudden got listed by Coinbase, then it would be like amazing, right? Then it would probably would get to $100. So If you have any friends at Coinbase, maybe that's what I need to do. I keep seeing job postings in Utah for Coinbase. Maybe that's what I need to do is I need to get hired at Coinbase, convince them to list garlic coin. Reminds me of futures trading back in March. There was no post for like 3 days. Dude, I am not too high on the current trading based subreddits. But whatever. Dude, ES is getting creamed here now. Look at this. KRE is getting smashed. How big of a move is this going to end up being? Okay, well, we're not to 100 points yet. Right? But the RTY is down 2.7%. Oil is down 4.6. Biggest winner, 30-year, 1.52%. I really should have bought this at some point, man. Maybe I just need to keep a Twitter page open just for these. Okay, let's see here. Peter Schiff, the 2023 financial crisis continues as 2 more regional banks collapse. Wall is down 25% and PacWest is down 36%. The KRE Regional Bank Index is down 6.5%, a new 52-week low. And each time a bank fails, Wall Street claims it's the last shoe. As I said from the start, it's a centipede. Nobody, well, okay, so let's be very clear. No bank has failed yet. It seems like that is action that one might see if a bank was failing, but we don't actually know that. And in fact, we actually kind of suggest that it's just people coming in and shorting it and trying to create a crisis, but that there's not actually any news or anything happening to justify that. Oh, you know what else we should mention? I totally forgot about this. Remember when we were looking at the dollar and we were like, well, I mean, the dollar fell here and then it just kind of came back up. But now since then, since 8:30, we've had like another push down. And so the dollar is down quite a bit now today. Down over $1. The dollar's down $1. It is time for me to go. I've way overdone. Totally lost track of time. This will be Regional Banking Crisis Part 3, right? All right, well, I'm okay with missing that move, even though it was crazy stuff, right? But that's just some volatility that, like, I missed it. It's okay. I'll see you guys tomorrow. Stay excellent.